Solved problems. Conversion of single entry into double entry. Problem. A trader keeps his books by single entry and he desires you to prepare a profit and loss account for the year ended 30th September together with a balance sheet as on that date. Upon analysis of the cash book for the year, you find the following, namely, received from trade debtors 75,000, received from cash sales 45,000, total 1,20,000. Bank overdraft on 1st October 1926 12,000, interest on above and bank charges 225, personal drawing 6,000. Manager salary 3,000, salary to staff 22,500, general expenses 23,775, paid to trade creditors 45,000, balance on 30th September at bank 7,275, balance on 30th September with the cashier 225, total 1,20,000. His capital on 1st October was 1,05,000, stock rupees 27,000, debtors 66,000, furniture 3,000, business premises 45,000 and creditors 24,000. On 30th September, his stock was 30,000, debtors 90,000, furniture 3,000, premises 45,000 and creditors 16,500. From the above figures, prepare final accounts after writing off 5% on furniture, 3,000 for doubtful debts and 5% interest on capital. Before solving the above problem on conversion of single entry into double entry accounts, namely preparation of final accounts under double entry, let us review the procedure and the method as to how to convert single entry books into double entry accounts. Conversion of single entry books into double entry. Occasionally, a trader having kept his books under single entry for a particular period desires them to be converted into double entry. Under such a circumstance, the steps necessary to be taken to so convert the books will be as follows. A statement of affairs will have first to be prepared showing the position of the concern as at the commencement of the period. Care must be taken to see that the total amounts of debtors and creditors as shown therein agree with the total opening balances of debtors and creditors accounts as appear in the personal ledger. Similarly, cash and bank balances as appearing in the statement of affairs must agree with the opening cash balance as shown by the cash book and with the opening balance as shown either by the bank columns of the cash book or by the bank account in the ledger. All the various assets and liabilities as determined from this statement of affairs will have to be brought into books by means of an opening journal entry, the difference between the assets and liabilities being credited to capital account. The books will thus be opened on the double entry principles to start with, assuming then that the usual subsidiary books such as the cash book, bought and sold books, returns and bill books have been kept. The next step would be as follows. From the cash book, all personal accounts will already have been posted. The only thing that remains to be done is to post the impersonal accounts which have remained unposted up to now. If account columns have already been opened in the cash book, their entries will have to be posted to discount account. The double entry of cash book will thus be completed. The bought and sold books, bill books and return books will have to be added up and their double entry completed by posting the totals to their respective impersonal accounts. Thus, the total of the sold book will be credited to sales account and that of the bought book debited to purchases account. The total of the bills receivable book will be debited to bills receivable account and that of the bills payable book credited to bills payable account. The total of purchase returns book will be credited to returns outwards account and that of the sales returns book debited to sales inwards account. The personal accounts which have already been kept in the ledger will now have to be gone through to see if there is any items that are not coming from any of the original records. If there be any such items, their double entry must be completed by means of analysis and journal entries. For instance, while running through the personal accounts of the customers, if items, allowances or bad debts are found credited to some accounts or items of packing, carriage, etc. are found debited to various accounts without their having first gone through any book of original entry, an analysis must be made of these and the totals thus ascertained debited or credited to the respective nominal accounts. The personal ledger will have also to be further scrutinized to see that there is nothing debited or credited there with properly ought to have been debited or credited to nominal or real accounts. Thus, if rent is debited to landlord's account or salaries are debited to personal accounts of clerks or payment in respect of purchase of machinery is debited to the account of the firm that has been paid in respect of the same, these should be transferred to their proper impersonal accounts. Having thus completed the double entry of all the transactions of a given period, a trial balance can now be prepared from the ledger from which a trading profit and loss account and balance sheet can be compiled in the usual way after bringing into account the outstanding assets and liabilities. Not frequently, the cash book is the only subsidiary book kept and the other transactions are recorded directly in the ledger to the personal accounts of the parties affected. In such a case, having first compiled the opening statement of affairs as already explained above, the double entry of the various transactions of the particular period under review would be completed by making a careful analysis of all the items appealing on both sides of the ledger accounts and by passing journal entries with the totals of the analysis thus ascertained. The analysis of the debit side of the customer's accounts will give the following opening balances as shown in the opening statement of affairs: sales, dishonored bills, transfers if any. The analysis of the credit side of the customer's accounts will give cash received from customers and discounts allowed to them, bills receivable, returns inwards, allowances made to customers, bad debts, transfers if any. The totals of these analysis columns will be debited or credited to the respective impersonal accounts, the corresponding credit or debit being given to a total debtors account. The analysis of the credit side of the creditors accounts will give opening balance as shown in the opening statement of affairs: purchases, dishonor or renewal of bills payable, transfers if any. The analysis of the debit side of the creditors accounts will give cash paid to creditors and discount received, bills payable, returns outwards, allowance made by creditors, transfers if any. The totals of these analysis columns will be debited or credited to the respective impersonal accounts, the corresponding credit or debit being given to a total creditors account. The correctness of the analysis would be verified by agreement of the debit balance of the total debtors account with the total of the list of debtors balances at the close as made out from the ledger. In a like manner, the credit balance of the total creditors account will agree with the total creditors balances at the close as extracted from the ledger. All the items of the cash book that have been left unposted will have to be posted to their proper impersonal accounts and its double entry thus completed. The trial balance can now be got out from these books and the arithmetical accuracy of the work as a whole checked. Now the problem. A trader keeps his books by single entry and he desires you to prepare a profit and loss account for the year ended 30th September 1927 together with a balance sheet as on that date. Upon analysis of the cash book for the year, you find the following: cash receipts received from total debtors 75,000, received from cash sales 45,000, total receipts is equal to 1,20,000, and the respective expenses: bank overdraft on 1st October 1926 12,000, interest on above and bank charges 225, personal drawings 6,000, manager salary 3,000, salaries to staff 22,500, general expenses 23,775, paid to trade creditors 45,000, and finally the balance in cash book is 225 and balance in bank book is 7,275. The total is 1,20,000. In the beginning of the year, his capital on 1st October 1926 was 1,05,000, stock 27,000, debtors 66,000, furniture 3,000, business premises 45,000, and creditors 24,000. By the end of the year, his closing stock was 30,660, debtors 90,000, furniture 3,000, premises 45,000, and creditors 16,500. From the above figures, prepare final accounts after writing off 5% on furniture, rupees 3,000 for doubtful debts and 5% interest on capital. Solution. Trading and profit and loss account for the year ended 30th September 1927. 2. Stock on 1st October 1926. Opening stock 27,000. Purchases 37,500. Buy sales 1,44,000. Buy closing stock 30,660. Total 174,660. And there is a gross profit carried forward is 1,10,160. By gross profit brought down 1,10,160. And the expenses in profit and loss account are 2. Salaries to staff 22,500. Manager's salary 3,000. General expenses 23,775. Interest and bank charges 225. Reserve for bad debts 3,000. Depreciation on furniture 150. Interest on capital 5,250. Net profit transferred to capital account is 52,260. Note: in order to ascertain the amount of credit purchases during the period, the creditors at the close and the payments made to creditors during the period are added, and from the total, the amount of opening balance of creditors is deducted. The credit sales are determined by adding the amounts recorded from the debtors to the debtors at close of the period and deducting from the total the debtors at the commencement. Finally, the balance sheet. As at 30th September 1927, on the asset side, cash in hand 225, at bank 7,275, total 7,500. Sundry debtors 90,000, less reserve for doubtful debts 3,000, net amount is 87,000. Stock, closing stock 30,660, furniture 3,000, less 5% depreciation 150, net amount 2,850. Business premises 45,000. Total assets is 1,73,010. On the credit side, sundry creditors 16,500. Capital account balance in the beginning 1,05,000. Add interest 5,250. Add profit 52,260. Total 1,62,510. Less drawings 6,000. Net amount is 1,56,510. Total liabilities 1,73,010. This is how the balance sheet is prepared. In the next lecture, we will discuss about the accounting for joint stock companies.